What's going on, everybody? My name is Mr. Leong, and welcome back to another video in the Startup Starter Kit, back in my channel called Business Basics. Thanks for tuning in. And today we are going to learn about inventory, and more specifically, inventory management in business. Now, chances are if you run a business and you sell products, you're going to have some inventory, unless you do drop shipping or just-in-time inventory management. But the reality is that inventory can be one of the most expensive things that your business purchases. So it's really important that you buy just the right amount of inventory, because if you buy too much stock, you're going to run into some problems. But if you buy too little inventory, you're going to run into some problems as well. So in this video, I'm going to show you how to effectively manage your inventory so that you can make more profits for your business. Let's get started. All right, let's begin. Thanks for tuning in. And if you haven't done so already, I would appreciate it if you subscribe to my YouTube channel so that you're notified every time I post a new video on this channel. And I'm well on my way to my goal of 1,000 subscribers. And also I'm trying to make 100 episodes for the Startup Starter Kit. Now, inventory is a very important aspect of a business that sells products. This is the parts, products, materials that you have on hand that maybe you use to produce things, but also these are the products that are ready to be sold to consumers. Now, examples include, clothing in a clothing store. You want to have a lot of inventory so that consumers can walk in, browse around, and take a look at the newest collection of items. You want to have fresh inventory. You want to have inventory that's not obsolete and not sitting around. And all of this requires careful management, because some individuals might think it's smart to have a lot of inventory on hand, take advantage of those vendor sort of discounts and specials, and buy a lot in bulk. But one thing you'll realize is that inventory requires a lot of cash, especially having a lot of excess inventory. And that's cash that you could be using in other aspects of your business. Now, inventory is something that requires careful management, because the key is to get the right product to the right person at the right time. Let's go back to our clothing store example. If you don't have a lot of inventory, that means that you're losing out on sales. So it's kind of like a balancing act, in my opinion. You want to have enough inventory, but not so much that you're burning money, but not so little that you're not taking advantage of sales. Now let me elaborate. When you have too much or too little, you run into a scenario of a surplus or a shortage. If you order too much, that means that with all that excess inventory, you're going to have to sell it at a lower price to get rid of all the inventory. Plus, that storage is extra money that could be used elsewhere in a business. If you run a toy store, obviously, some of these toys require a certain amount of space. You don't want to buy too much that you're buying all the extra storage space and the rent is going to be a little bit more expensive. And with the toys that you don't sell, you're going to have to lower those prices, and that eats into your profits. And you could run into a risk of obsolescence if you produce or buy too much. So that's if you have too much inventory. If you have too little inventory, customers get upset. I remember going to some clothing stores and asking if they had this product in a certain size, but they didn't have it. So they lost out on a sale because I was willing to purchase a product. And having too little inventory runs into a shortage problem and lower sales, because they're not taking advantage of having enough product to sell to consumers. Now, here are the key roles and the players in the retail supply chain. This is why it's so complicated. Imagine you are a retailer. You want to have enough clothing to sell to consumers, but that means you have to buy from wholesalers, and wholesalers have to buy from manufacturers. It's tough to really say, I need 150 t-shirts from the wholesaler because they may not have enough product. So all of this requires careful management, lead times, and really keeping an eye on the level of product that you have in your store. You can't just wait till all of the inventory is gone and then say, oh, telling the consumer we don't have enough product, because that just means that you're losing out on sales. You have to be proactive in really assessing your inventory levels or ensuring that there's enough product that's being sold to the consumers. And shortages are bad, surpluses are bad. It's all about finding that right balance and the right quantity of inventory to buy. Keeping track of inventory can also have a lot of advantages for a business. For one, you can also look at finances and really using data to forecast what products the store is going to need. So companies like Superstore, you look at, Best Buy, all of these retail stores have specific people to help analyze what products they're going to need. Obviously, during the holidays or certain periods of the year, they're going to have to keep extra stock. Another example, back to school, sort of those times, there's going to be a lot of consumers looking for laptops, especially university students. So that's something that the retail stores are communicating with the higher ups, and they're saying, hey, we're going to need a lot of HP, Dell, Apple laptops, ready to go. So that's something that businesses can do. And looking at finances and data is something that can be very important for a business. So you keep track of your inventory. You can also look at what products are selling, what products are not as popular, so that when you restock, you can buy more of the products that are more popular. And this can mean that you're lowering the cost of your inventory and storage. Because if you're constantly restocking products that are not very popular, and this is just going to waste a lot of storage space. So one thing you'll realize is inventory burns cash. The more inventory you keep on hand, the more cash that you're going to need to spend to hold that inventory levels. So keep an eye on that when you manage your inventory. So when you manage inventory for your business, you're going to want to keep an eye on ordering products, storing products, and how to store or where you're storing your products, how you sell and dispatch your products, and ensure that you have an appropriate quantity to sell to consumers. Now, inventory management is going to differ from, business to business. So you want to create a system or process that's going to be effective for your own small business. A grocery store that sells perishable items such as fruits and vegetables is obviously going to have a different inventory sort of storing and procedures compared to, say, an electronics store. Inventory management processes are going to vary based on the products that you sell, and you could also use a software to really keep an eye on things, barcodes, or you can do it manually and just keep a pen and paper handy and do it that way. So, but the main idea here is that as long as you're finding an effective way to keep an eye on inventory, reduce spoilage and theft, that's the most important lesson I think comes out of today's video. Now, here are some tips that I can share with you that will better help you to manage your inventory. The first one is to create a rundown of the products, the vendors, and information. This is quite handy. Maybe have their contact info, the cost of the products that you're buying, the vendor name, the contact representative, so that when you need to replenish items for your business or store, that it's all accessible and ready to go. And an example is maybe you are producing stickers or you're producing arts and crafts. So you want to have a list of vendors that you go to. That way you can ensure that you buy items in wholesale and that you're not looking for where you're buying the products. Also, some of these products are often sold in batches, so it might be a good idea to keep an eye on how much you have to buy to ensure a discount. Because maybe the vendor says, if you want this amount of paper, you're going to have to buy this much and then we'll give you a cheaper price. So having a rundown of all of the vendors and items that you buy and where to replenish can be very handy in managing your inventory. The second thing that you can do to improve your inventory management is to properly count and receive your inventory orders. You may think this is pretty straightforward. It's easy, right? Hey, just put these items away, receive it from the delivery vehicle, but you'd be surprised how much inventory is lost because it's not properly received, stored, or not properly checked. One thing that you definitely want to do is whoever is receiving a shipment, one thing you can do is have that person with your purchase order go over the items to check to make sure that everything is there. So I often did bookkeeping for a restaurant during my times as an accountant, and there's obviously a designated person to look over the items, check to make sure that they have the right strawberry numbers, the right amount of produce, meat, vegetables, grains, because if they didn't properly check or even the quality of the products, this can mean that they don't have enough product to sell to consumers that night. Imagine not having enough, French fries or not enough, beverages. That is definitely not ideal for a restaurant. So you want to check out the packages, make sure that they're stored in kind of, a designated spot, and you also want to inspect for quality. Missing items should be immediately reported because if you didn't receive an item or an item's not to your standard, you want to, be on that right away. Email your representative and ensure that you're not paying for those missing items that you didn't receive. So you can see here how you can actually save a bit of money by just making sure that you receive your inventory and make sure that it's stored properly. The third tip that I can share with you is to use barcode labels. Now, this may not be advisable for smaller operations or small businesses, but if you run a retail space, it's really handy because you can use these barcodes and then match it with like a computer or automated inventory system. And then that way you can actually have an accurate record, a running record of all of your inventory. Scanning your product at the checkout can also help to automatically track, the inventory, but also ensure that the inventory and the products are sold at the right price. Human error happens, if your products don't have, a barcode or a label and they just enter the price in manually, that can, result in the products not being sold for the right amount of profit or price. So barcode labels like SKUs or ID labels can also help to identify what products are because maybe they're in boxes and where they're also being stored. So combined with software, this can help you to accurately count your inventory. The fourth tip about, inventory management is that there's no one size fits all sort of policy that works for inventory management for all. Some businesses may need to do things a little bit differently, but I'm just here to share with you some sort of procedures that could be effective for your business. One is just in time. Now you order the inventory just in time or just as it's needed. So this is a little bit complicated because you need to look at all of your demand and your customers and sort of see when they buy things and then have your inventory come just as they come. Now the problem is this could run into some shortages because if you don't order enough inventory and you're doing just in time, you lose out on those sales. So it's really important for just in time that you kind of, use forecasting data to predict when your customers are going to go to your business. But it's not always a perfect science, which is why it's a little bit more complicated. You could also use ABC. Now this diagram here refers to organizing inventory based on the approximate value A, B, C. Now obviously the A items are definitely the most important for your inventory. They're 80% of the value of the business. There should be very tight controls over managing this part of the inventory. In an electronics store, this could be the actual, GPUs or CPUs. This could be the hard drives, or the actual RAM, the graphics cards, the high ticket items. There are also some items that are not necessarily the most expensive. So if you organize your inventory, this can help you to customize these inventory controls, and you just keep an eye on the approximate items based on the value of the total inventory. Most businesses use stock review. They look at how much inventory they have and then use forecasting to see how much more inventory they're going to have to buy for the business. That's called stock review, and this requires a little bit of forecasting, but at least you have some inventory already ready. JIT, or just in time, is a strategy that means that you barely have any inventory, and this could be not profitable for a business if you don't do it properly. So there's a few ways that you could manage your inventory, and it's all about what you are most comfortable with and what is the most effective at ensuring the right level of inventory for your business. And the fifth one is to continually check inventory. Consider using a POS system to give you a running total of products, but you'd be surprised how many small business owners actually don't really care about the inventory, or they don't keep an eye on it, and then they wonder where all this inventory goes when it goes missing or it's not properly counted. When you do a physical inventory count and on a regular basis to audit and detail it, this can really help to ensure that the number in the books, what you purchased, matches what's in the store. So this can mean that you're doing a physical count, you're seeing the products, you're constantly checking the quality, and then you're matching it to your books. And this can really ensure that you have the right amount of inventory, but also the right quality, quantity, and just to ensure everything is properly stored. All right, so that is continually check inventory just to make sure that nothing is spoiled, lost, because maybe sometimes inventory becomes obsolete, so you're gonna have to write it down or discount it in order to sell to your customers. So that's where you can do those financial adjustments. That's pretty much all I have to say about inventory. It's really important in managing cash flows, reducing costs, and ensuring that you have the right quantity at the right place at the right time and the right type of products. You want to keep an eye on things such as lead times, unexpected events, but the reality is that inventory is not a perfect science. Sometimes you're going to get a lot of customers and not enough product. But if you keep an eye on things, use data, and properly forecast when you're going to need products, this can help you to ensure that you are profitable, reduce any costs, and to get the right product to the consumers. So if you have any questions, let me know about inventory, and I hope you enjoyed today's video. Thanks for tuning in. If you have any questions, let me know, and I look forward to seeing you in the next video that I post for the Startup Starter Kit. Alright, thanks for watching, and see you later. Alright, bye-bye.